Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Hostilities between Israel and Iran enter a fourth day, stoking fears of a wider war in the Middle East. President Trump says the two sides may need to, quote, fight it out before a deal can be reached. Oil extends gains, with the market bracing for any disruption in a region that produces about a third of the world's crude. Gold nears a record high. Plus, President Trump lands in Canada ahead of the G-7 leaders summit, with tensions in the Middle East and global trade set to dominate. Good morning. So geopolitical tensions with the focus on the Middle East continue, of course, to percolate through these markets. European futures, after closing in the red by the end of the week last week, with losses across the week, pointing lower today by around 0.3%. The FTSE 100 here in the UK pointing lower by just 8 points. The energy majors continue to be in focus, of course, in the UK on higher oil prices. S&P futures pointing to modest gains of 0.1% after closing down by about 1.1% by the end of the close on Friday. Nasdaq 100 had a more challenging session with losses of around 1.3% today, called higher by 0.2, looking to add 39 points. We focus, of course, on the central bank action with the Fed on Wednesday and that decision being scrutinised. Let's flip the board and have a look cross-asset then. In terms of the moves around some of these traditional safe havens, you've actually had a bit of selling across the curve when it comes to US Treasuries in the session today. 442 right now, with yields up 3 basis points. The focus continues, of course, across assets to be on what is happening with the oil prices. We saw Israeli attacks on one gas field in Iran, the scrutiny in terms of where Iran could go next, with the Straits of Hormuz seen as unlikely but not completely off the table in terms of a potential focus for the Iranian regime, possibly in the days and weeks ahead. Again, it doesn't seem to be consensus amongst our analysts, but that would be the key risk for the energy markets. Brent up 0.9% so far in the session, building on the upside that we saw yesterday, which saw gains of around 7%. Gold, with the haven shift, of course, continuing to benefit generally, but a little softer so far in the session by 0.2%. The dollar is bid, euro under pressure at 115. Let's cross over to Asia right now. Avraham standing by in Singapore with a slightly more robust retail sales picture out of China.
Yeah, that's what the data is telling us. But you take a step back, take a look at how Asia stocks are pretty much flat, whether you're talking about price or volume, as the hostilities between Israel and Iran stretch into yet another day. We're seeing energy stocks. Those are the ones that are outperforming. Now, the Nikkei is also jumping as the yen weakens. To your point about the retail sales data out of China, we saw, yes, a big beat. So it gives you a sense of the resilience in the Chinese economy, despite this tariff roller coaster that they've been on. But note that our colleagues at Bloomberg Intelligence have also called it a retail boom on subsidy steroids that might not last. And if you look at separate data on the housing prices, for example, it shows that sector continues to deteriorate. So Chinese stocks have pared most of the gains from early on in the session. Flip the board, take a look at the renminbi as well, because the yuan today has been trading in pretty tight ranges. The signals from the PBOC has been quite interesting. If you can flip the board and take a look at the Chinese currency, as the yuan fix today was the PBOC allowing the currency to weaken for the first time in 5 sessions, but it was dollar yuan fix below 718. So to some, this speaks of a PBOC that's trying to signal currency instability will not be tolerated, even given this geopolitical climate and oil price volatility. Now, quick mention as well, when we look at the Japanese currency, remember on Friday it caught a bit of a safe haven bid, but it's given up a lot of that today as the oil prices jump. Remember, Japan is a net importer of the commodity, and we'll have a BOJ meeting this week as well. Tom.
OK, Avraham in Singapore, thank you very much indeed, with the check on the Asian markets, how they're adjusting, of course, to the geopolitical tensions in the Middle East, but also looking ahead to the BOJ decision, one of a number of central banks, of course, making decisions later and through this week. To the Middle East, the conflict between Israel and Iran is now into its 4th day. An Israeli strike in Tehran has killed another key military official, while Iran has fired several waves of drones and missiles over the last 24 hours. Loud explosions then have been heard over Tel Aviv as missiles were intercepted by Israel's defense system. Israeli emergency services say 14 people have been killed and 400 injured in the attacks, while the government in Iran says 224 people have been killed in Israeli attacks since Friday, most of them civilians. We'll get more on Israel's strategy with Dan Williams from our Jerusalem Bureau. Of course, here in London today, but typically out of Jerusalem. But first to Bloomberg's Jemana Pasechi, standing by in Dubai. So, Jemana, 4 straight days now of hostilities between Iran and Israel, and at least so far, no signs of this conflict ending.
No, no signs of things letting up at all. In fact, what we've seen is an intensification over the last 3 days. As you mentioned, we're into the 4th day now of these attacks and counterattacks. Over the weekend, Israel military and armed forces continued to strike at key military, defense and nuclear sites. But we also saw somewhat of a broadening out of some of those targets, because one of the energy sites around the South Pars gas fields was set alight as well. There was a blaze that temporarily halted some of the gas production in that part of Iran, and that also set off waves about whether this could also engender a response from Iran on energy infrastructure. And what we saw was actually an attack on the Haifa refineries again over the weekend too. So a broadening out in terms of the scope, and obviously crucial for anyone who's been watching the energy developments. But in terms of the death toll, the latest figures out of Iran have the number at 224. Some of them are key commanders from IRGC, senior level commanders from the Revolutionary Guard continue to be taken out, alongside those nuclear scientists that we spoke about on Friday as well. And on the Israel side, Iran continued to fire drones and missiles directed at central and northern parts of Israel. Most of those missiles have been intercepted, but some of them have actually managed to break through Israel's very sophisticated air defense system. The latest number put out by the Israeli Health Ministry was 14 people have been killed, but it looks as though the latest round of attacks on Tel Aviv have once again led to further number of casualties, and the figure is being revised upwards by 4 as of this morning. But what this does tell you, Tom, is that there is no signs whatsoever of de-escalation. Remember, those 6th round of U.S.-Iran nuclear discussions were scheduled to take place on Sunday. Those did not happen. And now, as we've been speaking about, further broadening out of attacks, and the war of words on both sides as well, still very strong, with both Israel and Iran not hinting at all that they're going to be stepping down anytime soon. And in fact, the closest thing that you could read to some form of a possibility for an off-ramp was the Iranian foreign minister this weekend saying that they would stop attacks if Israel would stop their attacks on Iran. But at this point, without international mediation and without diplomacy, unlikely that this is going to stop.
Well, talking of international mediation, we have been, of course, hearing as well from the US president over the weekend saying that he believes the conflict can be resolved diplomatically, but perhaps not right away. Let's listen in.
Mr. President, can you give us a sense of what you're doing to try to de-escalate the situation between Iran and Israel?
Well, I hope there's going to be a deal. I think it's time for a deal, and we'll see what happens. But sometimes they have to fight it out, but we're going to see what happens. I think there's a good chance there'll be a deal.
So, Jemana, do we have any clarity as to the US position on the diplomatic push, given that the talks, of course, were suspended? It didn't happen, of course, in Oman on Sunday between the US and Iran. Where does the US stand in terms of its push for diplomacy at this point?
Well, you have to remember, even on Thursday, the day before the attacks, President Trump tweeted that he's still looking for a diplomatic solution. We know, of course, that the U.S. were not actively participating in Israel's attacks on Iran on Friday, but they were aware of it. And over the course of the weekend, President Trump has alluded to still wanting to get a deal across the line, but then also their tacit support of what Israel is trying to achieve with these strikes on Iran and key assets there. At this point, many of the diplomatic channels are being worked. Trump even said calls and meetings are taking place. Iran and Israel should make a deal and will make a deal. And we know that many of the Arab states, including the likes of Qatar, are once again using their mediation status to help push the diplomatic diplomatic channels there. And of course, many countries in this region, in the UAE, in Saudi Arabia, are on high alert because they don't want things to spread. They also don't want to run the possibility of Iran going one step further and going down the option of potentially causing disruption on the Strait of Hormuz, attacking key infrastructure, or even going after U.S. assets in the region as well. So still very much a region on tenterhooks.
OK, Bloomberg's Jemima Pasechi with that important update out of the region. Thank you very much indeed. Let's get another angle on this right now, because the Israeli Defense Minister, Israel Katz, has said the military is targeting the regime in Iran, as well as the country's nuclear facilities. Let's get more on this then with Bloomberg's Dan Williams from our Jerusalem bureau, usually, of course, in Jerusalem, in London for us now, because, of course, the airs over and the sky over Israel is closed. There are no flights into that country, so you haven't been able to get back. But you are still, of course, well informed as to what is happening on the ground and the strategy of the leaders in Israel. So it seems to have shifted to some extent. The focus initially in the first 24 hours or so was on those nuclear sites, on the ballistic missiles, and on key leadership when it comes to the science and the scientists. Focus on the nuclear program and, of course, key military leaders as well. But now they are potentially, some ministers at least, talking and airing the possibility of regime change in Iran, Dan.
Yes, I think it's worth noting here, this is rather an occult take on it, but Israel made a point of naming this operation Rising Lion. On the face of it, that's a reference to a biblical quote. It's also a reference to the icon at the center, the pre-revolutionary flag of Iran. It's almost a signal to the Iranians that Israel, perhaps with the support of other Western countries, wants to see an end to this regime in Iran, a restoration of something like the regime that was in Iran before 1979. That would appear to be a stretch. That would appear to be very, very aspirational. But there is harder and harder indications that the Israelis, or at least threatening to target next the supreme leader of Iran, which obviously would reorder things in that country extensively. This could be a matter of bringing the Iranians back to the diplomatic table with the U.S., or it could actually be a plan in the works.
Can Israel significantly degrade the nuclear facilities of Iran on its own, or indeed establish that goal, if that is now the central goal of the Israeli government, for regime change without U.S. support?
That's $1 million question. If we go to the nuclear sites, Israel says it scored major damage against the Natanz uranium enrichment site, a site for conversion of highly enriched uranium to uranium metal that the Iranians would not be easily replacing anytime soon. That does leave Fordow, which was deliberately built by the Iranians inside a mountain very deep in order to resist and withstand an attack such as this. Israel does not have heavy lift in its military. It doesn't have the planes, the strategic bombers, or the large bombs that the Americans could wield. In theory, however, and it's shown this elsewhere, like in Lebanon, it could, if it has domination of the skies, keep sending planes over, burrowing each time with a bomb on top of a bomb on top of a bomb until it reaches the depths of Fordow. I imagine, and they've said as much, they'd prefer to see the Americans do it with a knockout punch with a strategic bomber like a B-2.
OK, Bloomberg's Dan Williams, thank you very much indeed, with an update in terms of Israel's strategy and objectives during this conflict that, of course, continues, and we continue to monitor the latest lines that cross as well, and we'll bring those to you. Let's bring in the market reaction right now. Bloomberg's Valerie Teitel with a closer look in terms of how markets are reacting to the continuing geopolitical tensions in the Middle East. Val, what is standing out to you this morning?
Hey, oil has really pared its gain from the open. Both Brent and WTI opened around 5% higher in the early hours of this morning. We've now really paired that, just up less than 1% on Brent crude. It goes to say, though, that this recent jump in oil prices has really wiped out the losses year to date. Take a look at this next chart. You can see that Brent and WTI are now trading roughly unchanged on the year, Tom, after this recent bout of price risings over the last few sessions. I think the question for the market here is at what level of WTI really starts to disrupt Trump's economic growth agenda. We know that Trump has wanted lower oil prices. He got it earlier this year when OPEC Plus started increasing production, but that's really been all but taken away so far in the last few sessions. But we also have our eye on how the equity market is handling this. S&P futures just holding on to gains this morning, up 0.2%. U.S. 10-year yields continue to creep higher. This is a theme continuing for a second day in a row now. On Friday, they really rose into the end of the session, showing that the Treasury market is a bit more conservative concerned about the inflationary impulse from higher oil prices rather than maybe an economic drag in the U.S. Economy. Gold is also trading roughly flat this morning, but the U.S. dollar is higher for 2 sessions in a row, Tom. I think this is important because we now have a catalyst to kind of trigger that dollar smile. It seems to be those Middle East tensions dragging the dollar higher. Watch out for the G7, Tom. If we do get good news on trade, that could also add to dollar strength. We know that dollar has been reacting quite positively if any new trade deals or any of that trade tension has decreased.
OK, Bloomberg's Valerie Teitel, thank you very much indeed. Coming up, what is Israel's long-term mission then in Iran? We're going to discuss that and bring in more analysis after the break. Stay with us. This is Bloomberg. Welcome back. As strikes on Iran intensify, Israel is looking to exploit the Islamic Republic's weaknesses in an effort to foment economic unrest. Let's get more analysis now with Khansarinia, who is Vice President of the US-based National Union for Democracy in Iran. Cameron, thank you very much for joining us in the studio in London bright and early. How vulnerable is the Iranian regime at this point?
Well, after 46 years of rule, the Islamic Republic is probably at its weakest moment that it's ever been. I mean, the past few days of Israeli attacks on the Islamic Republic have not only been a significant operational and strategic weakening of this regime, but also a significant psychological weakening of this regime. Ali Khamenei has ruled this country without elections as a one-man show, really, for 30 years. And the generals who rise up in his armed forces do not necessarily rise up because they're great military strategists. They rise up because they're personally loyal to him and they're loyal to his regime. And so to have woken up in the middle of the night several days ago, Ali Khamenei, with the head of his armed forces dead, with the head of his Revolutionary Guard, his Praetorian Guard effectively dead, with his senior political advisors dead, that was a blow to a man who is used to controlling everything, controlling the direction of his country. And for these men to be killed in the middle of the night in their own homes, in ritzy apartments in North Tehran, was a real blow to this regime operationally, but again, psychologically, for somebody like Ali Khamenei, who's used to calling all the shots. So I think it's fair to say that with that, it's weaker than it's ever been.
Well, how realistic is the Israeli goal, as articulated by that country's defense minister, to change the regime in Iran? How realistically is that as an aim for Israel now?
Well, over the past 10 to 15 years, you've seen increasing signs of domestic dissatisfaction with this regime. Iranians, in 2009, you recall the Green Movement, of course, the murder of Neda al-Sultan in 2016, 17, 19, most recently with the Women Life Freedom protests after the killing of the young girl Mahsa Amini. You've seen Iranians on the streets against this regime. The regime's own leaked internal polls say that 70% of the country don't support the regime. Even their traditional religious base or lower economic class base no longer support the regime because of the economic pressure the regime is facing, no longer able to pay subsidies that they used to. So it's fair to say that the regime does not have domestic support, and that's based on polling inside the country and the regime's own sources. Now, an attack like this, of course, throws an entirely new thing into the situation. What we have yet to see is significant rally to support this regime, even in the face of a foreign attack on regime installations. And I think part of that is because of how the Israelis have messaged this. They've been very clear, from Prime Minister Netanyahu through the defense minister and others, saying that their war is not with Iran or the Iranian people, but rather with the Islamic Republic. And in fact, saying very positive things about Iran. Iran has a great...
You think the Iranian people buy that? You think they believe that?
I think that many do. I mean, the Israelis have been very keen, in fact, to often flatter Iranians and say that Iran is a country with 2,500 years of civilization, going back to Cyrus the Great. And I think that many Iranians are so tired of a regime that have really tortured them and held them hostage for so long, so that when they see the head of the Revolutionary Guards killed, for them, they don't see that as a compatriot being killed, but rather as a terrorist being eliminated.
Is there a political alternative in Iran to the current regime? Is there an infrastructure in hiding that can step up and fill any void?
There is. What we see on the ground, and this comes from protest chants, not only polling, but what people on the ground are saying, is that there's a significant amount of sympathy and support for the pre-revolutionary system. Of course, you recall before the Islamic Republic, the Shah ruled Iran. His eldest son, Reza Pahlavi, lives in exile in the United States, between there and Europe. On the streets in the past several years, we've increasingly seen his name chanted as an alternative to this regime. He has said that he's willing to step in as a transitional leader, not necessarily to come in and be the next leader of the country, but to offer his political capital to secure a peaceful and secure transition and lead the country to democratic elections. So that's at this point the most likely alternative, given the domestic support.
If the Iranian regime survives this assault, is it not more likely at this point that it does make that decision to pursue a nuclear weapon?
I think that's very likely. I think that would have been the case whether or not this attack had happened. I think that's one thing that we in the West often don't really understand is that the regime in Iran is fundamentally different from almost any other government. It is, at the end of the day, a revolutionary regime. Its courts are still revolutionary courts. Its guard is still a revolutionary guard. And when the supreme leader himself says that death to America is not just our slogan, it's our policy, I think it's time to take that quite seriously. So this will certainly expedite that process. I think if this regime survives, which I think is a big question, this regime is more vulnerable than it's ever been. It could very easily collapse. So it is time for Western policymakers, but also investors, to start thinking about what a different Iran might look like. If they do survive, they will certainly make a run for it, but they could have done that before. These negotiations really for this regime were an aim to buy time, try to get sanctions relief because the economy has been crushed by sanctions. But I think it's very possible that this regime collapses and we're looking at an entirely new Iran again for policymakers, but also for investors.
Very interesting. Cameron, thank you very much indeed on with the view that Iran's current regime is at its most vulnerable in history, in its current state, of course. Cameron Khansarinia, Vice President of the National Union for Democracy in Iran, with that view. Coming up, we are at the Paris Air Show. We're going to shift focus. Blockbuster jet deals could be overshadowed by safety concerns following, of course, the fatal and tragic Air India crash. That is next. This is Bloomberg. Welcome back. The Paris Air Show is usually, of course, a hub of blockbuster deals, but this year there is a more sombre tone following the fatal crash of Air India's Boeing 787. Guy Johnson is on the ground in Paris for us. Guy, what are you expecting from this show?
A little less than we were expecting, I think, Tom, is the honest answer to that question. Clearly, events in India casting a very long shadow over what is happening here at the Paris Air Show. As also is the story that you've just been talking about, what is happening in the Middle East right now. But let's deal with India first of all. The CEO of Boeing, Kelly Ortberg, will not be here. It was due to be his first Paris Air Show as the CEO of Boeing. He is not going to be attending. He will be back at home making sure that Boeing has the right response to the events that have taken place in India and figuring out with regulators where we go from here. So that's probably the first and biggest effects. But events in the Middle East are also going to cast a long shadow here as well. A number of the orders that we were anticipating that would be announced at the show maybe get pushed later on in the week or maybe don't get announced at all. And they certainly won't be announced with the kind of razzmatazz that they normally would be announced with. So I think from the order point of view, we are likely to see maybe a little quieter show coming forward from Paris this year. There are other factors, though, that this industry is still grappling with. We're still dealing with the supply chain story that comes out of COVID. The industry's never really figured out exactly how to manage all of that and get back to where we were pre-COVID. And another factor that we're managing as well is what is happening with euro-dollar. So the depreciation of the dollar is going to have a significant effect on an industry that is largely priced, Tom, in dollars. There was a Citi note out the other day that suggested Airbus's value will drop by around 3 to 3.5 euros for every cent that the dollar loses ground. So just think about all of that in terms of the background to this. It is likely to be a quieter show than anticipated, with maybe headwinds beginning to gather once again, Tom.
OK, Bloomberg's Guy Johnson on the ground for us in Paris for that air show with all the details, breaking down the context with plenty more coming up, of course, from the Paris Air Show today, including in conversation with the Airbus CEO at 7:15 UK time. Coming up, a focus on the markets. Stay with us. This is Bloomberg. morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Hostilities between Israel and Iran enter a fourth day, stoking fears of a wider war in the Middle East. President Trump says the two sides may need to, quote, fight it out before a deal can be reached. Oil extends gains with the market bracing for any disruption in a region that produces about a third of the world's crude. Gold nears a record high. Plus, President Trump lands in Canada ahead of the G7 leaders summit, with tensions, of course, in the Middle East and global trade set to dominate the agenda. Let's check in on the markets then. European stocks ended in negative territory by the end of the close on Friday. It was a week of losses for European stocks. Today, futures pointing lower again by about 0.1%, but moderating some of the earlier, more significant losses flagged by these futures. In terms of the FTSE 100, largely flat in terms of the futures picture as well. FTSE 100 partly supported by the energy majors and the strength in the oil price. S&P futures stateside after losses of 1.1% by the end of the close on Friday, currently pointing low by 0.3%. Nasdaq 100 futures higher, I should say, by 0.3%. Nasdaq 100 futures also in the green, pointed to gains of 89 points. Let's flip the board and have a look cross asset. A major week as well for central banks, with the BOJ, the BOE, and of course the Federal Reserve. All three central banks largely expected to stay on hold with their policy settings. The language, of course, from Jay Powell in terms of the next steps will be scrutinised. Brent at $74 a barrel, closing in on 75, up 0.8% after a pop of around 7% on Friday on these Middle East tensions. Gold near a record, but a little softer so far in the session, just by 0.1% at 3,429. Euro dollar currently at 115, a little softer for the dollar right now, just down 0.1% versus the euro, and 442 with yields up 2 basis points on the benchmark. 442 is the yield on the benchmark US 10-year as we lead up, of course, to that Fed decision. Now, President Donald Trump arrives at the G7 meeting in Canada as the spiralling conflict in the Middle East is set to test the unity of a forum already divided over trade and tariffs. Oliver Crook joins us now to talk us through this first big international summit of Trump's second term. Ollie, where do G7 leaders stand then on the conflict between Israel and Iran? Is there unity in the response from the G7?
So far, there has been a fair amount of unity in the response from the G7 leaders, particularly from Western European leaders and the United States. You know, this idea that Israel has the right to defend itself. And despite the fact that there has been growing criticism for how Israel has conducted its war in Gaza from a number of the leaders within Europe, whether it's Macron, Friedrich Merz, or Keir Starmer, a number of others, basically all of them have had the same message here on what Israel should be doing as it regards Iran, which is that basically they have the right to defend themselves. There has been very, very little criticism in terms of the preemptive so-called attacks that Israel claiming that led to them attacking Iran. We had Friedrich Merz coming out saying that basically Iran is cannot develop a nuclear weapon. Israel has the right to defend itself. Something very similar from Ursula von der Leyen saying that Iran is the main source of regional instability within the region. Macron saying the same thing. But I think also for the European leaders, this brings to the fore another issue for them, that within the sort of G7 format, it is the backbone of the G7, the United States, that gives the Europeans a lot of the authority to speak on a number of issues across the world diplomatically, where they will not have a lot of influence. This looks to be another conflict in which the Europeans will be sort of bystanders. It does affect Europe, though, Tom, in another important way. This is the sort of final pillar of support for Russia within the region after the fall of Bashar al-Assad within Syria. Now we find the Iranians severely sort of undermined. From the European perspective, what's bad for Iran is also bad for Russia, and they'll be welcoming that development.
On the trade front, Ollie, is there any expectation that deals can be struck at this G7 meeting, or at least an easing of those trade tensions?
Listen, I think that what you see generally from G7 meetings is about collective action. Where you're seeing this G7 is different under the Trump administration is this is really a venue for one-on-one discussions with a number of leaders with Donald Trump and trying to make progress. I think that the closest possibly you could get to a deal from any of the G7s with the United States is with Japan. In the early days of the trade disputes with the rest of the world, basically Japan was sort of touted as one of the places that the U.S. has made a lot of progress. We had the Prime Minister of Japan coming out earlier in the week basically diminishing offsetting some of that. But we understand that the trade representative of Japan may also be there. So you could get something announced along the sidelines. As far as the European Union concerned, and this is sort of the biggest trading relationship in the world, we understand that they really have not made a huge amount of progress. They have been having ongoing talks, but at the moment the Europeans are still trying to figure out what the United States precisely wants and what the Europeans at the actual trade level can offer that the United States will accept. We had Ursula von der Leyen speaking over the weekend with Donald Trump saying that they're still aiming to get that July 9th deadline in order to get that trade deal over. What we understand, though, Tom, from the discussions we've had with European officials is that they're hoping to basically, hopefully, get a framework in place by July the 9th, not the final deal that buys them a little bit more runway in order to basically not get that 50% tariff that has been threatened by the Trump administration that would be effective in just over 3 weeks' time.
OK, Bloomberg's Oliver Crook, thank you very much indeed. In terms of the trade conversations and the focus, of course, on the Middle East, likely to be front and centre for this G7 summit. Let's take a closer look at how the markets are digesting this geopolitical unrest and uncertainty. Very pleased to say I'm joined now by Pilar Gomez-Bravo, Co-CIO of Fixed Income at MFS Investment Management, when Treasuries seem to be playing that role once again, the typical role that we normally get from the Treasury markets in terms of that haven at times of geopolitical unrest. There's a little bit of selling pressure across the curve today. But what are you seeing as a result of the geopolitical tensions? How are that as adjusting fund flows into the fixed income space generally?
Normally, good morning, by the way.
Good morning.
Normally, you would expect treasuries to behave as a safe haven asset. You would expect the dollar to behave as a safe haven asset. But if you look around the markets in general, you look at equities, aside of oil, really, you would think that not much is happening, in fact, which is surprising because I think that if just a few years ago you would have thought that Israel would be attacking Iran, I think treasuries would have rallied a lot more. I think there are some tectonic shifts happening right now in the markets that sort of put a little bit of pressure on sort of the role of safe haven of U.S. assets in general, mostly treasuries and the dollar. And we continue to see this push and pull between what naturally should be the tension of going into treasuries and yet the world trying to decouple a little bit from U.S. assets.
Is it concern about the fiscal deficit in the U.S., additional spending, additional tax cuts in the quote-unquote big, beautiful bill that is working its way through the Senate right now? Is that putting a cap on the upside for treasuries and how far yields can move, particularly at the long end?
Yes, I think that certainly that is a key factor. There's still a lot of concern, especially for foreign investors, about what it means for debt sustainability in the U.S., and I don't think that issue is really going to be resolved anytime soon. I think at best, based on the bill right now, you might just have a stable deficit of 6.5%. That's just still too high, given the economic developments in the U.S. at the moment. So that is still a pressure on the long end. The long end is reflecting growth and inflation expectations, but inflation is also a part of it. So this stagflation environment that people are talking about that we see is a problem for yield curves, and it's also infecting other long-end parts of the curve.
So how much is priced into the curve right now? 6.5% deficit, concerns about inflation. The inflation prints, whether it's consumer or producer prices last week out of the US, seemed pretty benign. What is being priced in at this point?
I mean, I think term premia, which is kind of the expectations of how much you should be pricing in, is quite high. It's fair. But if you go back before financial crisis, we kind of lived in this realm of, 100, 150 basis points of term premia. So I don't think it's particularly out of the realm of what's normal for the risks that we currently are living in. So I don't think that sort of is going to reverse anytime soon. I think there is still a preference for front-end part of the curve everywhere. I mean, let's not forget that we have Bank of Japan. Yeah. The long end of JGBs has been super volatile. That's also infecting kind of the long end in treasuries as well as the long end of the Buchsel, the German curve. And I think that sort of uncertainty around the long end is keeping a lot of investors away until there's more clarity around the tariffs and the impact on long-term inflation expectations as well as growth. So for now, I think that there is going to be volatility. But I also think that at some point, there is going to be demand for long ends once you get to certain levels. And I think that in general, there's going to be a better support for treasuries than there would be for the dollar. I think the dollar is probably still going to be on a weakening trend, whereas you can always facilitate buyers of treasuries through regulatory channels, for example, or other means.
Well, you've walked through some of this, but in terms of its totality, your view, in terms of your favoured long duration calls then in development markets, where does it take you here in the UK, in the US?
Yes, I mean, I think a lot of it depends on the technicals, i.e. what sort of finance ministries around the world are saying about supply, because that is another factor, is how much supply people expect. And there are certain curves that are particularly steep. So, for example, in the UK, you mentioned, obviously, the UK has already announced the DMO kind of less supply, so that should be supportive of that long end part of the curve. There are certain parts of the curve, like, if you go out to 10s, 20s in Australia, where you're again getting quite nice hedge yields and still supportive central bank fundamentals. So there's different areas. And even though not in the near term, in the long term, I think that long end JGBs, just given the hedge yields as well, for investors that are not Japanese, I think could offer.
So long end JGBs is looking attractive.
Not yet.
Not yet, but it could.
Not yet, but it could.
Okay. On a sector-by-sector basis, your preferences in this era of volatility and global adjustments that we're seeing, what sectors kind of are drawing your eye at this point?
Yeah, I mean, I think that if you just take a step back, normally a world of lower growth and slightly lower inflation, i.e. less sticky inflation that gradually declines, should support investment-grade credit. These are large companies or well-known companies. They don't tend to have default risk as much as high yield. And, again, the duration component, they're not as long-dated as opposed to, for example, emerging markets, hard currency. So there's a little bit of, like, getting extra carry without having to go too far out of your skis. And so we continue to see very supportive technicals, a lot of inflows going to the high-grade, investment-grade markets, corporate markets. And the fundamentals are still okay. I mean, they're generally solid. These companies continue to have good balance sheets. Slightly deteriorating interest rate coverage, but still fine. I think that European banks will continue to do okay. For example, given kind of the dynamics of the ECB that has been cutting rates, so that should be supportive. We like sectors, of course, that have real assets, because, again, we think that with inflation concerns, you'd want to have those real assets or contracts that have inflation linked. So you're thinking about some towers, or think about transportation services, certain capital goods, some infrastructure-related entities. And in Europe, things that are associated with the new spending or investments. So think chemicals, think capital goods, infrastructure investments.
Okay. Pilar, thank you very much indeed with some views there in terms of the corporate space when it comes to fixed income, and maybe a preference as well for long-end JGBs. Not quite yet, but at some point that could become a trade, with the focus as well on the UK front end and some opportunities here. Pilar Gomez-Bravo, Co-CIO of fixed income at MFS Investment Management. Now, some other stories making the news this Monday. Multiple cities in the US saw protests opposing President Donald Trump's administration as he held a military parade on his 79th birthday. Purely a coincidence, by the way. Nationwide demonstrations displayed the banner "No Kings" to denounce what they say are Trump's authoritarian tendencies. The protests were largely peaceful, but saw sporadic violence, including a shooting in Salt Lake City. President Trump has directed federal officials to expand efforts to deport migrants in America's largest cities. The move comes even as the administration looks to ease the impact of the crackdown on key sectors of the U.S. workforce. Last week, the president acknowledged the impact his deportation agenda has had in rural communities hit hard by the loss of agricultural workers. Coming up, I'll be joined by the CEO of Quantexa, identified by Bloomberg and Founders Forum as one of the 25 European startups that could change the world. We'll discuss why next. This is Bloomberg. Welcome back. Companies making video games, autonomous vehicles and generative AI are among those that have been shortlisted by Bloomberg and Founders Forum as the 25 European tech startups to watch. Among them is Quantexa, whose AI-driven data crunching software helps companies and organizations interpret information from across their businesses, identifying areas of underperformance and even potential fraud. The founder and CEO of Quantexa, Vishal Marria, is with me now in the studio. And Vish, you recently raised $175 million US. You've been raising capital pretty successfully. This was an Series F raise. You're valued at about $2.6 billion. So you are one of the most valuable startups in the UK. What are you doing with that cash? How are you deploying it?
Thank you, Tom, and great to be on again this morning. So as part of our plans, when it comes down to growth, investing into our platform, into our capabilities, has been at the forefront since we started Quantexa. In 2016, we were groundbreaking in how we contextualize data, in how we provide insights in that data to support our clients. And that mission has been forthcoming from inception of Q. Since closing Series F, and even previously, we've been on a journey not just around innovation, around the absorbing of generative AI into the platform, but also in areas like M&A, as well as both tactical tuck-ins, but also areas around strategic investments and partnerships. So the investment is being used right across the breadth of the company. Yeah. If it's around innovation, if it's around supporting our clients in the adoption of AI, but also in strategic areas in M&A and so on.
OK, so M&A is potentially in the cards for you as well. You've made an acquisition in the past, so maybe you'll pull the trigger on some more acquisitions. I want to talk about the growth that you guys have seen, because you came through with $100 million in terms of annual recurring revenue in 2024. What is that picture looking like? Because the macroeconomics have changed. That there is this global slowdown in growth. We're not in recessionary territory, but things have slowed, and we know that corporates are kind of cutting their budgets. Are you seeing any impact in terms of the demand for your products?
So, since again starting Quantexa, we've been very focused on our clients. Everything we do at Quantexa, we put the client at the center to our innovation, to our deployments, to our thought leadership, etc. Now, last year we announced exceeding 100 million in annual recurring revenue of our software. Yeah. And we continue to see growth on the ARR. We closed a record-breaking Q4. So we're a March to March financial year. We had a record-breaking Q4 on the number of deployments of Quantexa across the enterprises, but also in annual recurring revenue. And now where we sit today, we are suppressing the over 125 million of ARR and continue to grow that number at speed. But ARR is just one of our unit economics. Yeah. We've got to look at things around net retention rate. So this will be when a client is using the platform, how quickly are they expanding? And again, we are 120% plus on the net retention rates. So it's not just the speed of new logos and new deployments, but also in areas of expansion of our platform.
And your clients range from the NHS here in the UK in terms of the health provider, but also financial services, some big banks, including HSBC. How is AI changing the fight against fraud? Because this is a big piece of the services that you offer, the fight against fraud, know your customer. How is AI changing the fight against fraud? Is this an arms race you're in right now?
So I will call it less of an arms race per se. AI is transforming every single process in every single organization. How you go to market, how do you procure new clients, to how you manage risk. In all of these areas, AI is transforming. Now, the way we've gone about deploying our platform, to get the best out of AI, it fundamentally comes to trusting data. If you can't trust data, all of the models you apply on top of that fabric simply will not make sense. So since starting Q and the journey we've been on, the ability to connect silo data, the ability to contextualize data, and then to feed this contextual fabric into AI models are proving to our clients to make better decisions. So coming back to your question, every organization is looking at AI, and it's at board level conversation. But more organizations that are finding the value of AI have invested or continue to invest in their data fabric. And if you don't invest in that data layer, those AI models are only going to be as good as the data you provide it.
We were talking about the G-7 summit that's taking place in Canada this week, and leaders have been landing there. We know that trade is going to be part of the conversation in a time of tariffs that continue to be adjusted and moderated. The impact on corporates, the impact on your clients from this changing tariff regime, what are you seeing? Because you have an eye on global trade. What are you seeing, and how are you able to help these companies kind of mitigate some of that uncertainty?
So since export controls, since tariffs, it has absolutely shocked the system again. Right. So again, if I look at the journey of Quantexa, we've gone through, Brexit, we've gone through COVID, we've gone through 2, if not 3 active wars now, we've gone through high interest rates. every 2 or 3 years or every 1 year or every 6 months, there's now a shock to the system. And that shock in this case around tariffs is absolutely changing patterns of behavior when it comes to trade. New corridors are being formed, bigger corridors are being excelled. So this view of trade is really paramount when it comes down to finding risk, but also finding opportunity. And one thing here at Quantexa, and we're very privileged to be supporting all of our partners around this, we monitor over 60% of world trade goes through my platform every single day. So those patterns, those typologies, when it comes down to risk, if it's fraud or money laundering risk or sanctions risk, but also opportunities, our clients are getting substantial value, again, around connecting data, but those typologies you apply across that fabric becomes very powerful.
OK, Vish, thank you very much indeed for coming to the studio bright and early. Vishal, Marria, founder and CEO of Quantexa, with an eye, of course, on financial fraud and adjustments around trades and tariffs. And other news, luxury group Kering is set to name Renault CEO Luca De Meo as its next CEO. Sources tell Bloomberg the Italian will be appointed to the job in the coming days. De Meo will be tasked with turning around the struggling Gucci fashion label, which accounts for most of Kering's profits. Renault said in a statement on Sunday that De Meo had tendered his resignation and would leave the automaker on July the 15th. The shake-up at Kering comes after its shares have raised nearly 80% of their value since reaching a record in August 2021. There's plenty more coming up. Stay with us. This is Bloomberg. Welcome back. So with the Fed in focus latest this week, with the decision, of course, on Wednesday, the Fed is expected to remain on hold for a fourth straight meeting. Could, of course, face the ire, Jerome Powell, of President Trump over that decision, if indeed that is the decision they come to. But is there a bit of a catch-up that's needed in terms of the market pricing versus Fed officials and their expectations? They've been very comfortable signalling that they are happy to be on hold until they get more clarity in terms of the impact on inflation from tariffs, of course, and the job market. The labour market still remaining relatively resilient, but markets are pricing in 48 basis points, so almost 2 cuts through the end of this year. Is there a bit of catch-up in terms of how the dot plots evolve? Those will come through later this week. There's expectations from the team at Bloomberg Economics that the dot plots will signal just 1 cut this year. So you could see a readjustment in terms of expectations for the number of cuts that this Fed is prepared to take, given the relative resilience of the labour market and still focused on the details around the inflation impact. Let's briefly check in on what is happening in terms of the corporate space. A big move for Luca De Meo then from Renault to Kering, and this is the divergence in terms of the stock performance of both these companies. Renault's stock under De Meo has almost doubled in value. That is the blue line, of course. Kering, a very different picture. You've seen massive losses, 80% drop since the highs of 2021. This is what De Meo has to turn around then, with a particular focus on Gucci, which sits under Kering and makes up about 2/3 of revenues. Bloomberg Terminal users can get access to these charts and plenty more analysis, of course. Go to GTV on the Bloomberg Terminal. The opening trade is up next. This is Bloomberg.